Perfect. Hey, Jamie, thank you for joining us today.
Hey, thanks for having me.
Great to have you here. First, before we jump in, if anyone isn't following Outlier Ventures or the content that Jamie's been putting out on YouTube, you definitely should check out. It's not just YouTube; it's on Spotify as well, right?
Yeah, it's called the Metaverse Podcast, so it's pretty easy to find.
It is, in my opinion, the best way to get your a head start in the space. It's incredibly eloquent, some great speakers that you always bring on. So yeah, I'm a huge fan. So it's a pleasure to have you here. So yeah, let's jump in. What is Outlier Ventures?
So Outlier Ventures has been around for about over 8 years now. We were one of the first institutional investors into crypto generally, and of course that whole thesis and narratives evolved, whether you call it Web3 or now we refer to it as the open metaverse. And our kind of business model has had to evolve with the industry, because back in the day, nobody would give us money to invest in crypto startups. Firstly, most crypto startups wouldn't work because the technology wouldn't work, it wouldn't scale. So we really had to focus on being a value investor, which is obviously a bit of a cliche, overused word. Every investor, every VC says they're a value investor. But we really had to be, because we had no money. So the only thing we had was value. Anyway, fast forward to today, we are about 100 people. We're a partnership, which includes, some people here in your industry, but more generally, some of the world's leading founders. We have Seb of Sandbox, co-founder of Sandbox, actually Snoop, but also a lot of very boring people from Wall Street and capital markets. And that's, I guess, what we're going to talk about is this kind of convergence of those worlds. But today we're effectively an accelerator. So we work with early stage projects, the weird and the wonderful of Web3, and we kind of help them raise money, develop the proposition, go to market. I think we passed our 150th portfolio company at some point, and we're going to do another 200 this year. So I think by volume, we're certainly kind of one of the most active investors in the space.
Yeah, I mean, you've definitely been at the forefront of not just the thought leadership, but also actually investing in a broad range of products and underlying protocols that I think are defining the future of the metaverse. But before we get there, how do you define what the metaverse is?
Yeah, I mean, I think all the speakers today, yourself included, have done a really good job of coming up with a definition, or at least a framework to think about it. So for me, the most important thing is when people think of the metaverse, they immediately jump to this idea that it has to be fully immersive VR experiences, or you need AR to be ubiquitous. You're walking down the high street and you're seeing these billboards or whatever. And that will all come. But the reality is the metaverse is first and foremost an economic system. And firstly, it's the metaverse. For it to be meta, there can only be one of them. And if you go back to sci-fi, that was envisaged as a pretty dystopic process of capture and control by a single corporation. And whilst it might not be a single corporation, I think if you look at the internet, there's maybe a handful of organizations that have created their own various dystopias. But the reason why thinking of it as an economic system is so important is, despite how it might be experienced, we need to be thinking intentionally about how value is created, who owns it, how it's controlled, and it needs to be as inclusive as possible. And so actually, if you think about it just in the VR context, it's not very inclusive at all. You firstly have to be able to afford the hardware, and you have to have the right kind of bandwidth and all that kind of stuff. So that's the first thing. The second thing is, I personally think of the metaverse as a contact language. So historically, when two civilizations meet, they have to find, and they have different languages, they have to find a way to communicate. And I think you alluded to it earlier, the kind of range of disciplines that are coming into Web3 or the metaverse are incredibly broad, and it's a convergence of culture makers, like many of you in the room, finance and high finance, and we'll maybe talk about that a little bit later. The kind of financial tooling is becoming democratized. finance, culture, and tech. And it's all three of those things. And it's how we all talk about and envisage a future, the future that we do or we don't want.
Interesting. So, we've mentioned the metaverse, and what I love about, how fast this space is growing is we already have a new augmentation of the metaverse with the open metaverse and a core pillar of your thesis. How would you describe what the open metaverse is, and what's different with that vision versus a broader spectrum of the metaverse in general?
Yeah, so maybe to just kind of give some context, what was it? January of 21, we published a paper, I won't call it like a research paper, but like a thought piece, which was called the Open Metaverse OS as an operating system.
Essential reading, it really is.
I mean, it's always a bit embarrassing. It feels dated now because the space moves so quickly. So bear in mind, it was written, a year ago, which is like a decade in our world. But the principle was effectively this: that as an accelerator, you speak to lots of early stage startups, typically 6 to 12 months ahead of the wider market. And in 2020, we probably spoke to about 3,500 Web3 startups. And so you kind of synthesize some trends and then try to develop a thesis, like project forward, what does that mean when these all start coming online? And the word metaverse kept on coming up a lot, and always in the context of NFTs and how NFTs were kind of being applied. And so that led us to sit down and really question what that meant. And then to try and come up with an investment framework about how we saw that universe. And that led us to publish the Open Metaverse OS paper, which I believe ended up becoming required reading at Facebook, which I don't know if it's a good thing or a bad thing, but apparently it happened. So what do we mean by the Open Metaverse? So for us, as I was saying earlier, if you look at the internet, it looks very similar to that dystopic nightmare that was imagined in things like Ready Player One, where single corporations effectively monopolize a particular industry. In that book, it was everything. It was just one immersive game that was just so amazing, it basically consumed reality, everybody's reality. But it was also an economic system, and in that economic system, because it was a single corporation, was trying to control it, they could control the monetary supply, they could remove a player. Effectively, they had full control of that economy, bottom to top. And you had no option. You just had to, you either played it, or you were disconnected from that whole economy. You couldn't create, you couldn't earn an income. You were just this lump of meat, basically. And that feels like eerily similar to most of our experiences with digital platforms today. So fundamentally, it was our belief that having worked in Web3 for so long, Web3 at its heart allows for digital property rights, right? It allows for something that is digital to be scarce, provably. It allows for the provenance of that thing, but ultimately it allows for the kind of self-custodying of it and the exchange of it in a peer-to-peer way. So fundamentally, that asks questions of what is a platform in Web3. It doesn't mean that platforms won't exist, but they're going to have a very different complexion, because ultimately the user can exit that system. They are in control, notionally in control of the value they create. They can cash out of that system at any time. Because they're in control of that asset, they can be included in the financial system. So something called DeFi. Very simply, it's like peer-to-peer borrowing and lending on a blockchain. And with things like NFTs, that can be a form of collateral, whereby you can effectively, try and go to a bank and be recognized for most of the things that are digital as any form of value, certainly not to underwrite a loan. So for us, it was effectively looking at how Web3 could be an operating system for this vision of the metaverse, whatever that means to you, where in its DNA you have fundamentally the sovereignty of the individual. You have digital property rights, but then also with things like DAOs, you can have forms of collectivism. So I could be a sovereign individual, but simultaneously, I can freely and fluidly join collectives of people to aggregate time, value, knowledge, expertise, and then I can exit that system whenever I want. So it's kind of like, a pretty significant socioeconomic system that we're talking through. And so it was interesting and ironic that probably 6 months after that paper, Facebook rebrands as Meta, and tries to take that whole narrative of they are a metaverse company. And so the question then is, if they're a metaverse or they're the metaverse company, like what's their business model? Like what's their vision for a metaverse? And sadly, I think we know what it all is. And if you imagine that all of a sudden you're going to strap on an Oculus headset, which maps your retinal response to visual stimuli, so your emotional state that you're not even aware of. It maps the floor plan of your home and objects in it, including people, including children. So this is like Zuckerberg's wet dream, right? He's in your body, he's in your home, and he's got a very profitable business model. And that's why they're selling Oculus headsets for cheaper than a smartphone.
So to jump in on that, because we talked about, it's interesting, this whole new world of Web3 introduces a ton of very, I'd say, complex concepts for people to kind of grasp. You talk about tokens. There's a whole new business model to think about when you're building a business that isn't just purely reliant on a traditional revenue stream. You have many different things to play with. So how does value accrue in the metaverse? And how then do you view that from an investment perspective?
Yeah, so of course, like we're all still figuring it out, and the reality is, anybody that knows anything about crypto, just even by holding some, is there are no real fundamentals about how you value these assets yet, or at least not recognized by the people that are speculating on these systems, right? And that's okay because it's very nascent. But effectively, from an investment perspective anyway, we kind of see there are three forms of value, how value manifests. So the first one are fungible tokens, or like shorthand, you'd probably just refer to them as a token, I think you did earlier. There are NFTs, non-fungible tokens, and there's, of course, still equity. People still create companies, they employ people that might have IP. So the important thing of understanding each of these three different things, equity is fairly obvious, but it's equity's relationship to the other two assets. So firstly, the fungible token or token, again, people might refer to it as a cryptocurrency. It's not really functioning as a currency. It may or may not be used for payments like ETH, but ultimately it's a digital commodity. And so whatever industry you're in, when you look at a particular protocol or set of protocols, you're really understanding them as part of your digital supply chain. So it's no surprise that there's a lot of analogous terms like gas, mining, all these terms that are thought of in terms of hard resources that you require to make a car or build a house. Well, in Web3, effectively, we're talking about digital supply chains, and these things are digital commodities. You need them to use that supply chain. You need to spend them, consume them, and if you enable that supply chain, you earn them. So that's the first thing. And as I said, it might have some characteristics of currencies, but they should be thought of as commodities. And by the way, commodities are not securities. So you can tell Gensler of the SEC quite clearly that. And by the way, the Commodities Exchange in the US argues that they're commodities too. The second one are non-fungible tokens. And ultimately, there are infinitely more use cases for things that are non-fungible than fungible. Fungible things are things that basically you don't care about the individual asset. Like, you don't care which $10 note you have, you just care it's worth $10. You don't care what petrol you put in your car, as long as it's petrol and you care about the price. Things that are non-fungible are things where its individual characteristics are important, and the provenance of that things are important, and both of those things will affect its premium. And so non-fungible things could be anything, but I think in the context of the metaverse, and certainly for people here in this audience, I would understand NFTs as atomized culture, right? So, and I would understand music as atomized culture. The problem at the moment is in the music industry, people discount the value of music as a thing because they think of it only in terms of streaming revenue, which is not very much. But actually, when you start to think of these things as atomized culture that have much more value than just, the price that somebody might be prepared to pay to stream it. Also, NFTs can represent IP. So I think a lot of people get distracted by the file format of an NFT. Well, I either like the picture of the NFT or I don't, if it's a Bored Ape. Or I either like the soundtrack of that particular song if it's a music NFT. But ultimately, this form of atomized culture, especially if it's kind of leveraging technologies like yours, means the artist is in control of the relationship with their fan base beyond the platform. So it might be minted on a platform, but ultimately the relationship is retained between the creator and the owner, and even if that ownership is exchanged. So I think the first instances of music and art and all this kind of stuff are great, but increasingly we're going to see more and more utility built into these things where it's also a ticket. It's also a subscription to future drops and various other things. So the interesting thing then is how that all interplays with equity. So there are still startups and they still raise money, but increasingly equity is just seen as a vehicle to get towards creating these digital assets over a period of time. Now, one of the challenges is, especially in the context of the creative industries, that if a startup raises money through equity, they can still be acquired by people that you probably don't want them to be acquired by, to either integrate or kill off. The quicker they get to a decentralized entity, they cannot be acquired. And so I think for us, what's most exciting is projects that might use equity as a vehicle to get things up and going as quickly as possible to become a disruptive force or a transformative force, rather than just a group of people that can be hired, fired, or integrated into kind of the status quo.
And so in that sense, I guess at a high level, we're talking about the equity is kind of helps you get off the ground, but then you kind of launch a token or a more decentralized model where the platform or the business is technically owned by the community rather than a group of individuals.
Yeah, exactly. And I think, a couple of other panelists have talked through this idea about, user-owned, be it protocol, be it platform, all of these various things. But, we saw it with, Artifact, if everyone's familiar with Artifact. Like, I love the guys. They're sneakerheads. So if you're a sneakerhead like Nike coming along and saying, hey, would you like to be our digital play? That's interesting. I think they'll still do really interesting things. But I remember talking to them actually about token design, and all of a sudden it went really quiet and they stopped talking about a token. And it was obviously because Nike were talking about acquiring them. And I was a bit disappointed, right? Because I thought they had the potential to be one of the first truly metaverse native Web3 propositions that could have gone on and transcended sneakers. They could have been a Disney, a community-owned Disney, right? I think another really interesting one is Bored Ape Yacht Club, which you're probably bored to death of hearing about or at least seeing. But this principle of if you own the NFT, you own the IP of that NFT, and you can exploit it however you want, or activate it, it's probably a better term because it's in a positive sense. And so people have an ape and they create a coffee brand with the ape that they own. Somebody's created a band with several apes as the characters. That's not centrally coordinated. The community are doing it. And by doing it, they're collectively growing the value of that franchise that is owned through its atomization of NFTs.
It's really interesting. I know we've got a few minutes left, so I want to jump to one of our kind of final points. Outlier is a very purpose-driven fund, and I guess a company. It's not a traditional fund. What drives you? What gets you really excited about the potential of this new space and the future of culture and commerce and how this will shape it?
Yeah, well, I think it's kind of coming back to that earlier point around financial inclusion. So if this is an economic system, and I would argue the metaverse can't actually happen without crypto unless something else comes along that's superior. The only thing that I've seen that is a universal peer-to-peer economic system is crypto. It has many failings, but in aggregate, it effectively functions as this kind of proto financial capital market. And most value, two things. Most value that is digital is not valued at all. Its only value is represented in the share price, and it's only realized of a platform, and it's only realized by the owners and shareholders of that platform, often not the users, and often at odds with the users. And the sad thing, music's a great example of that, right? Somebody said it earlier, but effectively we've been conditioned to think of music almost as free. It's like unlimited music forever for the price of a coffee cup, coffee every month, an espresso, or whatever it is. And people have been conditioned to think of it that way. But ultimately, like music is the ultimate atomized culture. It's the ultimate social currency, I would argue. And therefore, music can be a currency, the currency of the metaverse. But the problem with a lot of platforms at the moment is this kind of notion that you could be notionally wealthy, digitally wealthy in a game. You could have lots of skins. You could be on Fortnite, not a metaverse, by the way, just a game. And you could be notionally wealthy until you want to exit that platform. You can't, it's very hard to sell the assets. If you're caught selling them off platform, you lose your account, you're blacklisted. And you certainly can't go into a bank and take out a loan, a short-term loan or a mortgage. And it's also true in the creator economy. If you're an Instagram influencer, bless them, then try going to a bank and getting out a loan. Well, you don't have a job. It's a regular income. What if the platform? I mean, they won't even have the nuance to understand. It's what if the platform, removes you? You are financially excluded. And so if you think about all the forms of digital value that are currently not recognized as wealth by the current financial system, like trillions of dollars. And the second thing is all the people, billions of people that are currently financially excluded from the system. So the awesome thing with Web3 and Web3 as an operating system for the metaverse is that as long as there is at least one other person on the planet that values the thing that you've got that's now represented in digital form, you can borrow and lend against it. Now, if it's only one person, you're not going to get a very good deal, but you're still going to get a deal. If there's more people, then you're going to get a better term. You're going to get a better deal. You can go into DeFi now with NFTs, and you can take out a short-term loan, and the NFT is a form of collateral. So if you imagine that you could represent all forms of digital value, either as an NFT or as a digital commodity, this represents, I reckon, 10 times the GDP growth that China brought to the global economy over the last 2 decades. And it promises to onboard whole generations of people, gamers, the creator economy. So it's pretty big.
Yeah, it's pretty huge. I know we're running out of time. Traditionally, the venture capital industry has shied away from investing into music for many reasons. It's it can be a tough space to think about growing a platform, largely due to challenges around rights and licenses and everything else. And it feels like Web3 is opening up a whole new opportunity for investing. And Outlier, of course, are very active in the music and entertainment space as well. And I'm sure there's a bunch of startups in this room. How do people apply and get in touch?
Yeah, so firstly, I'm going to give a shout out to Modadao, who's left the room just when I did that. So they're going to do a presentation later, I think at like 3:30 or something. You definitely want to make sure you listen to that. It's beyond the platform. It's thinking fundamentally about how you leverage all the things that I just mentioned to transform the music industry and to effectively, properly value what is music, what music represents, and how music as value flows around the internet. And so we're interested in people building like fundamental primitives for this open metaverse system. We often don't refer to the projects that we work with as portfolio, as this like passive thing, they are a stack of technologies, and either through introduction or just organically, they often work, they're interoperable, they collaborate, and with every one we invest in, it makes it easier for another one to kind of come to market. We're also looking at platforms, we're looking at creators, culture makers they might have existing IP or they're creating IP and they want to think about how they can bring it into the metaverse as an asset, as an instrument, as a social currency. So, I'd welcome everything from a creator all the way through to like a classic tech founder to get in touch. We're basically perpetually recruiting. I think right now we're running 4 cohorts of 10 startups, so 40 startups in parallel, across from hardcore DeFi that I personally barely understand, through to we're about to launch a luxury accelerator, and we work with a lot of the big protocols. So if you're building on Polygon, Polkadot, we work with like the most promising startups in those ecosystems. So you go to outlierventures.io/basecamp. Pester me in Twitter is normally a good way to do it. And I can connect you up to the team, and I'd like really welcome you all to kind of join me and us in creating this open metaverse thing. Because like honestly, I don't know what you're doing with your life if you're not at least thinking about this space, because it's the most intellectually rewarding. I think you can be very purposeful. You can make a lot of money too.
Amazing. Thank you.